Hey there traders, welcome to our video today. We've got a great video for you ahead. We're going to talk about Marvell earnings that are coming up on March 5th. And when there's earnings released, there's a huge volatility crush that happens right after earnings are released. And we're going to take advantage of that and show you exactly how to do it in this video. So whether you're a beginning option trader or a seasoned trader, stay tuned. We're going to talk about exactly why Marvell Technology has the perfect setup right now for this put credit spread. Real quick, before we jump in, go ahead and hit the like and subscribe buttons down below. Let's get at least 100 likes and get this video out to as many people as possible. Also, be sure and download the free options workshop in the link below. It talks about the main benefits of trading options over buying stocks. Put credit spreads are a popular option trading strategy that allow traders to generate monthly income. Here's what you need to know. The definition of a put credit spread: you sell a put option at a higher strike price, and then you buy a put option at a lower strike price for protection. Both options have the same expiration date. The key benefits are limited risk. Your max loss is capped at the difference between the strike prices minus the credit received, and they're defined profit. Your max profit is the net credit received when you place the trade, and time decay is to your advantage. As the option approaches expiration, time decay accelerates, working in your favor as the seller. So you profit if the stock stays above the short put strike at expiration, and this is a bullish strategy. As long as the stock price remains above your short strike price, you make the profit and keep the credit collected up front when you place the trade. It's a great way to potentially profit from high IVR, or implied volatility, situations such as earnings announcements. The current market conditions make this an ideal time to place a put credit spread pre-earnings in Marvell Technology. Here's why. Well, first of all, high implied volatility. With the earnings release on March 5th, option premiums are extremely high, allowing us to collect a lot of premium. There's also going to be a volatility crush right after earnings are announced, and this will benefit our position. There's also a bullish semiconductor outlook. The semiconductor industry is projected to grow by 11.2% in 2025, with AI-related chips seeing double-digit growth. Marvell's recent partnership with AWS for AI compute solutions positions it well in this future coming trend. Strong recent performance. Marvell's stock surged 24% in December due to positive earnings and partnerships, indicating there is momentum. And it's a short-term opportunity. This strategy capitalizes on the immediate post-earnings movement, and it aligns with the projected growth in chip sales to $697 billion in 2025, which is expected. All right, guys. This is Yahoo Finance, and you can see Marvell Technologies, ticker symbol MRVL right here. It's trading at 106 right now, and you can see the 5-year chart trending up, and then it had a slight pullback recently. So that's the perfect opportunity for us to go long. You can see the 52-week range of 53 to 127. So we're at 106. So we've got room to move back up to that range. And our 1-year target that Yahoo has is 129 down there, so much higher than the 106. So the analysts have a higher target. Let's take a look at this article that just came out recently, a couple days ago, on 2 magnificent stocks that are screaming buys in February by this Harsh at the Motley Fool. And he talks about, number one, Marvell Technology. And he talks about it registering healthy gains of 48% on the market in the past year. The good part is that investors who missed the impressive rally are still considering a stock at just 40 times forward earnings. So it's for a growth stock that's expected to keep growing. That's not horrible. The red hot demand for Marvell's custom processors and networking chips used in AI data centers should play a central role in boosting its bottom line going forward. Marvell's data center revenue nearly doubled in the third quarter of fiscal 2025 to $1.1 billion. And they got more than 72% of their revenue from data center business, up 39% from a year ago. And this is what's needed for AI, guys. So this is going to keep going. Let's see there. What they indicated on their conference call was the strong results were driven by a significant step up in our custom AI silicon ramp as customers saw increasing demand for the differentiated capabilities offered by these new custom AI chips. So these guys are the leaders in this custom AI chip. They also have Amazon, a relationship with Amazon that they generated and started last quarter. The tech giants Amazon Web Services, AWS, has signed a 5-year agreement with Marvell for multiple products that include custom AI processors and networking chips. So they're teamed with the AI giant, and it's locked in for the next 5 years. So it's going to go up. It's just a matter of when. Marvell is the second largest player in this segment with an estimated market share of 13%, a number that the company wants to increase to 20%. If Marvell indeed achieves a 20% share of the custom AI processor market, thanks to its expanding relationships, its data center revenue could jump $12 billion in 3 years. So, all good news. All right, so let's go to the Tasty Trade option trading platform and show you the trade. You punch in Marvell right here, MRVL, and there's a link down below to Tasty Trade, great option trading platform. There's benefits if you go through my link. I also utilize Moomoo, and there's a link below for that as well with benefits. So we go, we're on the table mode on the trade tab right here, and we punched in Marvell. So I like to go 30 to 45 days out. So I'm going to go March 21st, 32 days to expiration. And you can see down here in the lower left, 3-5. I've got it set up here. You can just set this up in your tools on Tasty Trade, and it'll tell you exactly when the earnings are. 3-5, and it says after the bell, so after the close on March 5th. But we're going to go to March 21st, so it's going to be after earnings. We click on this to open up the trade. We've got puts on the right, calls on the left. So we're trading at 106 right now, and the IV rank is 74. Before we jump into this, let me show you a couple of other items. You can go right here to research news, and you can see the income statement, and you can see every year the revenue is in blue and net income is moving up consistently annually every year. And same with the balance sheet with assets and liabilities. They're extremely strong financially. And then if you click on the ratios right here, you can see their gross margins are 39, almost 40% gross margins. So that's huge. The other item I want to show you right here is the chart. Go to chart, and I've got my chart set up where I put in some support levels. I put in my target price. My target price for these guys. What is my target price? Target is 130, and it's trading at 106. So it's just about where it is on Yahoo Finance. We've got support at 100, and we've had a recent downtick. RSI. This is the RSI. RSI is down around the 44 level. So that when it's lower on this chart for RSI, that means it's oversold and a better chance of it moving up. So these are the items that I look at on the chart. So let's go back to the trade page, and then we're going to go on the right side, the put side, and we're going to sell. I'm going to sell the 100 put for $5, and then we will buy the 90. So this is $10 wide. The 90 is for protection. We will collect $3. So one option contract controls 100 shares of stock, so that's $300. The difference between the spreads is the $10 minus the 3 collected is $7. And you can see our max loss right here is $7 times 100 shares, $700. Our max profit's $300. We can go to the curve mode, and we can look, and we click on analysis, and then scroll over, and you can see the break even is 97. So it's the $10 minus the $3 collected. So it's 97. So we can have the stock price go all the way down to 97 from 106, and we're in good shape. And that's below the support level. 100 right here was where we had support. If you look at the chart, yeah, we've got support at 100. So this is why I like this trade. So you hit review and send and place the trade. Now, guys, if for some reason Marvell Technologies has earnings on March 5th and it comes out and they don't guide higher, or they don't beat on the earnings or the revenue, and the stock price drops, or sometimes they beat and it still drops. So really no telling, but I'm a believer that this is going to go up. But if it did move against me, I'm not worried about it. Here's why. What I will do is I'll just roll the March put credit spread out to April and collect additional premium and wait for the stock price to come back. All right, guys, remember to leave a comment below. Let me know if you're going to put on this trade in Marvell Technology, and if you're going to put on this exact same put credit spread or something different. Also, be sure and hit the like and subscribe buttons. Be sure and download the free options workshop. Thanks for watching. I'll see you in the next one.